Hello, and welcome back to Boni's Life, the only place where we navigate the chaotic, exhilarating, and sometimes downright absurd world of cryptocurrency. If you've been watching the markets lately, you've probably experienced a full spectrum of human emotion in the span of a single day. One minute you're planning your retirement on a private island, the next you're wondering if you can still afford your Netflix subscription. Well, fear not, my friends, because today we're going to make sense of the madness. We're diving deep into the current crypto market, providing a comprehensive analysis for every type of trader out there: the adrenaline fueled short term scalper, the patient mid term swing trader, and the stoic long term hodler. We'll be dissecting the latest market data, exploring the global events that are shaking things up, and most importantly, providing you with actionable strategies to navigate these choppy waters. So grab your coffee, buckle up, and let's get into it. All right, let's start with a bird's eye view of the crypto landscape. As of today, December 8th, 2025, the total cryptocurrency market capitalization is sitting at a hefty $3.215 trillion. That's a lot of digital dough. We've seen a 2.8% increase in the last 24 hours, which might sound like a nice little bump, but as we all know, in crypto, a day can feel like a year. The 24-hour trading volume is a staggering $119.212 billion, which tells us there's a whole lot of buying and selling going on. Bitcoin, the king of crypto, is currently flexing its muscles with a dominance of 57.1%, while Ethereum holds its ground at 11.8%. These two giants continue to lead the charge, but the rest of the crypto kingdom is a wild and unpredictable place. Now, let's talk about the mood of the market. The Crypto Fear and Greed Index, our trusty sentiment meter, is currently flashing a value of 20, which puts us squarely in the territory of extreme fear. This isn't surprising given the recent price volatility. When the index is this low, it means investors are extremely worried and the market might be oversold. For a contrarian investor, this could be a buying opportunity. But for the faint of heart, it's a signal to proceed with caution. It's like seeing a beware of dog sign on a gate. The dog might be a fluffy poodle, or it might be a three-headed Cerberus. You just don't know. And speaking of volatility, let's talk about liquidations. In the last 24 hours, a jaw-dropping $474.82 million in leverage positions have been wiped out. That's a 330.87% increase from the previous day. Over 128,000 traders got wrecked, as the kids say. The largest single liquidation was a $17.81 million position on Hyperliquid's ETH-USD pair. This is a stark reminder of the dangers of high leverage trading. It's like playing a game of financial Russian roulette. Sure, you might win big, but the consequences of being wrong are severe. The long-short ratio is currently quite balanced at 50.53% to 49.47%, which means the market is divided on where we're headed next. It's a tug-of-war between the bulls and the bears, and right now, it's anyone's game. Now, for all you short-term traders out there, the ones who live life in 5-minute candles, this is where the action is. We're looking at the 1-hour and 4-hour time frames, where fortunes can be made or lost in the blink of an eye. Bitcoin is currently trading at around $91,940, up 3% in the last 24 hours. It's been a roller coaster, with a 24-hour range between $87,887 and $92,203. Ethereum has been even more volatile, up a whopping 10.9% in the last 7 days, currently trading at $3,144. For the short term, the technical indicators are giving us mixed signals. The RSI on the hourly chart is at 67.034, which is a buy signal, but it's approaching overbought territory. The MACD is also in buy territory, indicating positive momentum. However, the stochastic indicators are screaming overbought, which suggests a potential pullback. It's like your GPS telling you to turn left, while your gut is telling you to go right. Who do you trust? Here's a potential setup for the next 24 hours. For a bullish entry, we're looking for a clean break above the immediate resistance at $92,300. If we see a strong volume confirmation, our next target would be the R2 resistance at $92,458, and then the psychological level of $93,000. A stop loss could be placed just below the pivot point at $92,062. For a bearish entry, we'd want to see a rejection from the current levels and a break below the immediate support at $91,500. This could open the door to a retest of the $90,700 support level, which is also where the 20-period moving average is on the 4-hour chart. A stop loss for this trade could be placed just above the pivot point. Remember, as a short-term trader, you're a nimble warrior. You're not here to marry your positions. You're here to make a quick profit and get out. It's a high-stakes game of musical chairs, and you don't want to be the one left standing when the music stops. All right, let's zoom out a bit and talk to our swing traders. You're the patient ones, the ones who are willing to wait for the perfect wave to ride. We're looking at the daily and weekly time frames where the trends are more established and the noise of the market is filtered out. The daily chart for Bitcoin is showing a potential bear flag pattern, which is a consolidation pattern that often leads to a continuation of the downtrend. However, we're still trading above the 50-day and 200-day moving averages, which is a bullish sign. It's a classic case of the market being at a crossroads. The weekly chart, on the other hand, is flashing a strong sell signal from the technical indicators. This is a cause for concern for the bulls. The weekly RSI is not yet in oversold territory, which means we could see further downside before we find a bottom. It's like being on a road trip and seeing a sign that says falling rocks ahead. You might not see any rocks falling right now, but you know you need to be careful. So, what's a swing trader to do in this environment? This is where we need to pay close attention to the global events that are shaping the market. The upcoming Federal Reserve meeting is a big one. The market is expecting a 0.25% rate cut, which would be the third one this year. Lower interest rates are generally good for risk assets like crypto, as it means more cheap money flowing into the system. However, if the Fed signals a pause in future rate cuts, it could spook the market. It's like getting a good report card, but your parents tell you not to get too comfortable. Another major development is the recent approval of the first ever listed spot crypto markets by the CFTC. This is a huge step forward for regulatory clarity and could pave the way for more institutional adoption. We're also seeing governments getting into the game, with Texas announcing a $5 million purchase of Bitcoin for its strategic reserve. These are all bullish long-term signals, but in the midterm, they can create a lot of uncertainty. For a swing trading strategy, I'd be looking for a confirmation of the trend direction. A decisive break above the $93,000 resistance level on the daily chart would be a strong bullish signal. And I'd be looking to enter a long position with a target of the recent highs around $100,000. On the other hand, a break below the $88,000 support level would confirm the bear flag and could lead to a move down to the $80,000 area. In this market, it's all about patience and waiting for the right setup. Don't be afraid to sit on the sidelines and wait for the perfect pitch. And now, for the true believers, the diamond-handed hodlers, the ones who are in it for the long haul. You're not fazed by the daily price swings. You're not worried about the fear and greed index. You're playing a different game altogether. We're looking at the weekly and monthly timeframes where the true story of crypto unfolds. The long-term vision for cryptocurrency remains as compelling as ever. We're talking about a technology that has the potential to revolutionize finance, art, gaming, and so much more. The adoption of crypto is growing exponentially. We're seeing major corporations, financial institutions, and even governments starting to embrace this new asset class. The recent news from the CFTC and the state of Texas are just the latest examples of this trend. When we look at the long-term charts of Bitcoin and Ethereum, we see a clear pattern of higher highs and higher lows. Yes, there are brutal bear markets along the way, but each time the market has come back stronger than before. It's like a hero's journey. There are trials and tribulations, but in the end, the hero always emerges victorious. For the long-term investor, the current market conditions are just noise. The extreme fear in the market is an opportunity to accumulate more at a discount. As the legendary investor Warren Buffett once said, "Be fearful when others are greedy, and greedy when others are fearful." This is the mantra of the long-term crypto investor. You're not trying to time the market. You're buying and holding for the long term, with the conviction that this technology will change the world. Of course, this doesn't mean you should just blindly throw your money at any crypto project. it's important to do your own research and invest in projects with strong fundamentals, a clear use case, and a talented team. But if you believe in the long-term potential of this technology, then the current market volatility is nothing to be afraid of. It's just another chapter in the epic saga of cryptocurrency. So, to recap, here are some actionable strategies for each type of trader. For the short-term scalper, be nimble, be quick, and don't get attached to your trades. Use tight stop losses and take profits when you have them. The current volatility is your friend, but it can also be your enemy. Respect the risk, and you'll live to trade another day. For the mid-term swing trader, be patient and wait for the trend to reveal itself. Pay close attention to the key support and resistance levels, as well as the upcoming economic events. Don't be afraid to sit on the sidelines and wait for the perfect setup. In this market, cash is a position. For the long-term hodler, keep your eyes on the price. The long-term vision for crypto remains intact. Use the current market fear as an opportunity to accumulate more of your favorite projects. And remember, time in the market is more important than timing the market. No matter what type of trader you are, it's crucial to have a clear trading plan and to manage your risk effectively. Never invest more than you're willing to lose, and always do your own research. The crypto market is a wild and unpredictable place, but with the right knowledge and the right strategy, you can navigate it successfully. And that's a wrap for today's episode of Boni's Life. I hope this deep dive into the crypto market has been helpful. Remember, the market is a constantly evolving beast, so it's important to stay informed and adapt your strategies accordingly. What are your thoughts on the current market? Are you bullish, bearish, or just confused? Let me know in the comments below. And if you enjoyed this video, be sure to hit that like button, subscribe to the channel, and ring that notification bell so you don't miss our next episode, where we'll be taking a look at the most promising altcoins for 2026. Until then, trade smart, stay safe, and I'll see you in the next one.